Don Luskin, the notes tell me that you favor Bernanke. I just want to ask you, you got better ISMs for October, you got better car sales, and today you got better jobs. Why do we need QE2 at all?
We need QE2 because the Fed's been too tight for the better part of 2 years. Milton Friedman was famous for saying that you can't tell whether a central bank is tight simply by looking at the interest rate. You have to look at lots of other things, and you've got to admit that the economy has been exactly acting like an economy acts when a central bank is too tight. The Fed began QE1 at the August FOMC meeting when they started reinvesting the prepay proceeds from their MBS portfolio. That's when they started buying Treasury bonds again. That $900 billion that you talk about, it's only $600 billion of new money. $300 billion of it is money they've already got that's just coming back to them in the form of prepays, and they are reinvesting it. So they are going to gradually, quantitatively ease, which is all they can do when you're stuck at the zero bound. And the economy started to get a little bit better after they started reinvesting those MBS proceeds in August. So fine, I'll grant you that the economy is looking a little bit better, and thank God for that. But now the Fed has to follow through and do what it was hinting at all along, which is what caused the economy to start getting better. Now they have to deliver on that, and if the economy keeps getting better, they can stop. Larry, this is just called monetary policy.
All right.
And that's all there is to it.
Monetary policy. Jeff Matthews give you a whack at it because there are other indicators. I mean, there are about $2 trillion or $1.7 trillion of excess reserves sloshing around. You do have this rally in gold and commodities and the drop in the dollar, Jeff. Some people get real worried about that. What's your take?
Larry, I'm not a top-down economist. I don't look at all those economic statistics Ben does up in his ivory tower. I just listen to a lot of companies all day. And if you listen to real companies in America, business is very strong, very healthy. Union Pacific carloads up 14%. Marriott Hotels said the business traveler is back. American Airlines up 18% revenues. That's in the U.S. WPP Group, the world's largest advertiser, said that U.S. business is up 10% last quarter, fifth straight quarter in a row. And they said that the U.S. was acting like an emerging market economy. And so this whole notion that the economy is stuck in zero, as Don just said, I think is faulty. I think the Fed is focused on the unemployment rate. That's the wrong thing to look at. Unemployment will get better now that we've got less uncertainty about taxes and health care.
Well, Don, what about unemployment is a traditional lagging indicator? And, you know, you listen to Jeff on these company reports, it really sounds like the Fed is easing into a better economy. Maybe that's why those inflation indicators like gold, commodity, and the dollar are flashing warning signals.
Honestly, I take those warning signals, and I think Bernanke feels the same way. I take them as very salutary, kind of, great, come ahead, more, it's working, it's working. You know, right now, Bernanke's view is that inflation is too low. Measured inflation is about 1%. And I know you can certainly look at pockets like gold and, you know, oil's back up to new highs for the year, and some ag commodities are going crazy. But if you measure this on an economy-wide basis, don't just look at one or two commodities, inflation's practically zero. It's about 1%. And if you don't just look at the four companies that your other guests named, the reality is that GDP has only grown 3.5% real since the end of the recession 5 quarters ago. Now, if this were a typical recovery based on the depth of the recession we had, we should have grown 9% by now. So it's great news that we're finally really getting some green shoots. Bernanke was early in calling that. But we got to keep watering this garden if we want more green shoots. And like I said before, if it starts to get out of control, if we start seeing real signs of inflation across the economy, if instead of just 4 companies doing well, it starts to be 4,000, then they can just stop the program.
I have news for you, Don. It is 4,000. It's not just 4. Those were 4 that I picked out of a hat. You could pick thousands, and I'm not.
Well,
I'm
you're
not
just not seeing it in the statistics. You're just not seeing it in the statistics. If you listen to conference calls all day, Don, excuse me, you listen to conference calls all day, you hear the same thing over and over again. The one pocket of weakness in the economy is still the household sector, but that's going to come back once we get rid of these mortgage foreclosure issues. The Fed, in my view, is bringing vodka to the party at the time when they're supposed to start taking the punch bowl away.
Hey, Don Luskin, German Finance Minister Wolfgang Schäuble, he's out on the tape this morning, quote, "With all due respect, U.S. policy is clueless." Now, Germany has a pretty good record of financial and monetary rectitude. In fact, the ECB, the Euro Central Bank, is not going to have quantitative easing. Why do you think he's saying the Fed is clueless?
Well, look, these people are, our government, and the German government, and the Chinese government, they're all, unfortunately, they all see themselves as competitors. Where they met in the G20 and they agreed not to do competitive currency devaluations. So now they're going to do competitive monetary policy. Look, the reality is, Larry, that the U.S. is closer to getting back to peak output than Germany is. The German economy has had a nice quarter. I mean, it's come back very recently stronger than the U.S. economy, but it fell twice as much as the U.S. economy, and from the trough has only come back, just a little bit more than the U.S. economy. So the U.S. economy is way outperforming the German economy.
Well, if we're outperforming so much, I don't know why we have to prime the pump. I mean, Jeff Matthews, let me just ask you from a stock market perspective, are you more long than short right now?
I don't see how you can be very short, because Bernanke has basically said, look, the casino's open 24/7, all credit is good, put your chips down. And I don't see what's going to stop this until we start to see inflation numbers get into the actual statistics that Bernanke looks at. But with regard to inflation today, I don't know what Don's listening to, but Kraft just raised prices on 40% of their U.S. product line.
Yeah. Well, that's great. I mean, we're full of anecdotes, but the statistics that look at the entire economy tell you what they tell you. And unless they're just simply outright wrong, I guess you should call the Bureau of Labor Statistics and the Bureau of Economic Analysis and get them to listen to a few more conference calls instead of doing these statistics.
I think that would be a great idea. It would have helped Alan Greenspan figure out that the economy was roaring back in the early 2000s when he kept the pedal to the metal and got us into the housing problems that he got us into by keeping rates so low.
Don Luskin, are you
I think
more
that's a
long
great
than
point.
short? Are you more long than short now?
Right now, yes.
Well, look, absolutely. I mean, there's no question that the economy is no longer in recession. There's no question that it's moving forward. It's just moving forward much more slowly than it ever has on a historical basis, because the Fed has been too tight. As of Wednesday, it stopped being too tight. Now, think back over all the long careers we've all had. Think back to those great junctures, like in 1982, when the much vaunted Paul Volcker was Fed chairman. Remember of August '82, when he took his boot off the windpipe of the economy after slaying inflation. All he had to do was take that boot off the windpipe and the economy could breathe again. The Dow blew through 1,000 and never looked back. The Fed was too tight coming into that. It stopped being too tight, and that made all the difference. And that's all that's happening now.
Right.
And the stock market is celebrating, and the stock market is not stupid.
By the way, Paul Volcker was on the tape also from a speech where he said that the Bernanke Fed should really restrain itself. He said these steps are going to eventually lead to inflation, so he may not be quite as keen on it now.
Well, he ought to listen to Bernanke's speeches, Larry, because Bernanke is doing this in order to make inflation higher. That's the whole idea.
I think that, Jeff Matthews, let me ask the last question. We're sort of out of time.
Sure.
What about a change towards less taxing, less regulating, and less spending in Washington? Will that do the trick instead of pump priming from the Fed?
I think the hint of that with the results of the election is exactly what's going to do it. Companies have been holding back. If you listen to a few conference calls, I know Don doesn't like listening to conference calls, but if you listen to real companies, they have been holding back because of the uncertainties of taxes next year and the problems associated with the health care reform. And I think you're going to start to see companies finally start to hire, as we saw today, in response to this much stronger business conditions.
Gentlemen, I have to leave it there. Thank you very much. Jeff Matthews and Don Luskin, two old friends. And